Today we've got Matt Mims with us as part of our extended release on our investment series. Matt is a board member for the Responsible Investments Association, Australasia, quite a mouthful, Matt. And he's here today to give us some insights, maybe a bit more information, particularly around responsible, ethical and green investing. And it's probably quite appropriate. If we have a look back here, we've got a nice surreal green beachy kind of look. And Matt, welcome to this. Why don't you tell us a bit more about kind of what this investing is all about?
Sure. So look, to some degree, responsible investing is no different than any other form of investing, really apart from one factor, and that is that responsible investors will look at non-financial issues as well as financial issues when assessing whether they should invest or not. And they'll take into consideration such factors as environmental issues, social issues, governance, how well a business is governed, for example, before making that investment decision.
So thinking about that, I mean, you hear about these green funds. Now, what's that? Is that more about the environment, or is it, is it about trees? Is it about beaches? What's it all about?
If you look at responsible investing, you can broadly split it into two groups. What I describe as ethical investing, and that is really where an investor or fund manager is taking a value-based view or an ethical view in terms of where they invest. And that tends to be where green-type funds are invested. Just to give you one or two examples of ethical investing, it might be where a fund manager decides to screen out what they deem to be bad or negative stuff, gambling, armaments, tobacco, that type of thing. Or it could be where they specifically focus on a sustainable or green area. So that could be renewable energy, clean technology, water science, that type of thing. The other broad type of responsible investing is where fund managers don't necessarily exclude a particular type of investment, but they will factor into their investment process how well a business or a particular security operates in terms of environment, social aspects and governance.
Right.
And what they tend to do is they rank, for example, companies on how well they perform in terms of their environmental policy, their social policy, how they treat their staff, that type of thing, and also governance, how well the business is run. So it won't necessarily mean that you're excluding companies, but you might decide to invest less in certain companies that rank more poorly in terms of those ESG factors.
So thinking about that, an example could be then, that might not sound environmentally friendly, but an open cast mining company, for example. Their approach around what they do after they've finished mining would maybe fit some of that criteria as well. So it's not just about clean and green?
Yeah, so you could find, for example, an ethical investor that doesn't exclude mining, but they would want to see proper, detailed and evidence of remedial policy in terms of their mining, either they're not leaving the environment in a worse place than they found it.
So Matt, thinking about these particular funds, and it's a question we get at the Commission actually, is well, what is a green fund, or what is a sustainable fund and an ethical, and how does that fit what I think is an ethical fund and what a green fund could be? So for example, your ethical view of investment could be quite different to mine. So how do providers actually, give the information that an investor needs to make a better decision around this?
In terms of broad managed funds, there's no hard and fast rule around them having to disclose, what their ethical or responsible approach to investing is. But you would expect managers that are doing it or are good at it would volunteer that. KiwiSaver is a different case in point where under legislation, KiwiSavers have to disclose their approach. KiwiSaver providers have to disclose their approach to responsible investing. And it could in fact be that they don't have one, but it also could be that they do, and then they would provide some description around their particular approach.
KiwiSaver is a really good topic, isn't it? We've got 2.6 million New Zealanders invested in KiwiSaver. Do you see that there's a bit of an interest at a public level now to perhaps understand a little bit more where that money is invested? And given the disclosure arrangements, Are there ethical and sustainable choices out there in the market today?
Yeah, look, I think anecdotally that's very much the case. If you look at research done in countries like Australia, you know, there is growing demand for investors to be aware of the types of holdings that they have within their super scheme or their KiwiSaver. So I think that's very much the case. And I really can't imagine that New Zealanders will be any different in that regard. There are, in terms of KiwiSaver schemes, there are responsible investment options, which would be disclosed in terms of the relevant investment statement.
Of course, we've got our KiwiSaver fund finder that, you know, gives New Zealanders the choice and to try and find different funds, different choices around that. But it's a pretty small market. I mean, do you see as balances grow, or even the awareness of what social responsibility, ethical, green investment's about, will create a bit more of demand in the public, may drive this a little bit more?
Yeah, I think so. I think that KiwiSaver has got to be, to my mind, the vehicle through which you get mass uptake in responsible investing. Because of that disclosure and because it is the way that the vast majority of mum and dad investors actually have access to financial markets and managed funds. I think there is I always liken ethical or responsible investing a bit to prompted and unprompted brand awareness, is that unless you're asked the question, you're probably not thinking too much around what's actually invested. And I think, you know, a lot of New Zealanders would probably think, well, of course I want my money invested responsibly. And so I think this whole area of responsible investing and ethical investing provides just another take and an advancement on what they're probably already thinking.
Some of the reasons I hear anecdotally or in the market, or just from a public perspective, is there's a lot more work involved, the costs are higher, the returns aren't as good. I mean, what are your views on this? I mean, is that fact or fiction?
Yeah, look, I think that there is undoubtedly likely to be more cost if you've got a rigorous ethical or responsible investment screen.
So why is that? I mean, it's a good point. There's more cost, but what's the work involved because of that cost?
Well, there tends to be more research done in terms of the companies, because you're looking at other non-financial factors. Quite often a responsible investor will outsource research in terms of additional information. They might have their portfolios audited to make sure that they're not breaching their responsible investment guidelines. So those kinds of factors could or can push the cost up slightly.
And how do they rank compared to your more traditional share portfolios?
Yeah. Look, and the other question you asked was in terms of performance. And, you know, ethical or responsible funds have been performing very well. There's no real suggestion that you have to forego performance in order to invest ethically. And I'll give you a couple of examples. The Responsible Investment Association of Australasia, RIA, run a benchmark report every year, and they survey responsible funds versus non-responsible or mainstream funds. And each year, for the vast majority of time periods across Australian equity, international equity and balanced funds, the responsible funds tend to outperform their mainstream counterparts.
Is there a possibility in the future that investors could change the behaviour of companies in the future and how that they might provide goods or services, take into account some of these impacts, both socially and also environmentally? I mean, do you see that being a possibility?
Yeah, I mean, look, one of the areas of responsible investing is engagement, shareholder engagement. So that's where shareholders, whether they be collective or individuals, and obviously collectives have more power, engage at a company level to try and change policy. So that's certainly one area that it's happening.
How does someone learn a little bit more about it? Where would they go? Where would be the kind of the place to start a little bit more, to get a bit more information on this topic?
In terms of locally, obviously RIA, the Responsible Investment of Australasia, does have some information available on its website. If you have a financial advisor, it may well be worth talking to your financial advisor or even your managed fund or KiwiSaver provider. They should be able to provide you a bit more information on whether your investments are invested in line with your values, etc.
Matt, thanks for your time today. I think anyone that's watched this video clip has learned a little bit more about the topics being ethical, green, sustainability, how it fits into investment, and more importantly, hopefully, how to ensure that we protect the lovely beaches that we have here in New Zealand as being part of that. And thanks again.
Thank you very much.